And the biggest uncertainty is really to Trump policies and to the tariffs. We've gone from being a member of the G7 or the G20 to basically looking to craft what I would call, or a petroleum economist friend of mine has already called the G1, where it's America against the world. And that means tariffs, which probably push the price up for the first time they're implemented, but will lead to lower numbers down the road because Saudi Arabia and others will probably have to compete with Canada, and Canada's going to still want to pump their 4 million barrels a day to the U.S. or through the U.S. And we haven't dealt with tariffs on oil for a long time.
Absolutely. And do you feel also it's not just a cyclical thing? It's not just this administration or that administration. Structurally, over the long term, over the decades to come, Tom, even if the Trump administration may not be as renewable friendly, the cat's out of the bag. Like most of the economies of the world are also trying to transition towards renewables, which would be bearish for things like legacy oil.
Yeah, it's difficult to predict when the peak oil demand will come. Generally, when you add 1 billion people every 9 or 10 years, you're going to add a lot of oil demand. There's an equation for that. But the problem is that there are efforts afoot to basically replace fossil fuels with renewables or with electricity. And that's worked very well in China. I think there's some suggestion that we may have seen the highest gasoline demand numbers in China in the last couple of years. And particularly if there's a trade war that tends to target China, they're just not going to be using that the amount of gasoline or diesel that they used or that they were on a schedule to use in the next few years.
Tom, is there a bull case for oil next year? And could it be in the form of a hawkish US foreign policy towards Iran? And if it is maximum pressure, then could up to 1.2 million barrels a day of Iranian exports be taken off the market? And could that, in effect, erase the surplus?
Well, remember that Iran has essentially one customer for its exports, China. And if we have a trade war against China, it's going to be tougher for them to get their crude oil. I do expect that the Trump administration is going to implement tougher sanctions on Iran and also on Venezuela. But that's kind of part of the recipe for that front-end loaded 2025. Those higher prices will come about when the tariffs get implemented. But eventually the market will adjust, and I think it will adjust to where there's a surplus of maybe 1 million to 1.3 million barrels a day.